Happy Friday, guys! And before we get started, I just have to say this is one of the most important videos I've made in a long time. It's probably one of the most valuable videos I've ever shared with you or that anyone will ever share with you. Because anyone who spends time in this space, in the crypto space, hears the same thing every week. One person says the chart is broken. Another says the fundamentals look perfect. And someone else pulls up an on-chain metric and says the market is about to rip. And most people sit there watching all these opinions collide, trying to figure out which one actually matters. But no one tells you why they're saying what they're saying and from what standpoint. So today I want to give you something simple, a clear way, a map to understand every voice you hear online, a way to tell when someone is describing short-term pressure, long-term direction, or the deeper forces that move the entire crypto market. And once you have this map that I will give you in today's video, so you're gonna wanna stay until the very end, the noise will fade and decision-making will get easier for you. So if you're ready, let's get started. When you see people online, okay, different influencers, different analysts saying that the chart looks weak, or a level broke, or the trend shifted, they're speaking the language of technical analysis, TA. TA is the study of how prices behave. It looks at what the crowd has already done. It's past tense focused and present tense focused. But it doesn't look or examine the asset itself. Technical analysis works on the idea, on the premise, that price reflects everything known in the market. This is why people stare at candles all day long. They're trying to read behavior through patterns that show up again and again. Trends, support, resistance, momentum, breakouts, volatility. None of this explains, though, if you think about it, why Bitcoin should be worth more in 6 months or less, does it? It's just not taking into consideration the factors that would allow them to calculate for this. Because once again, technical analysis is focused on the past and in the present day market behavior. It simply shows how buyers and sellers are acting right now. So think of TA. A simple way to go about this is to think of TA as the heartbeat monitor. It helps you see, much like a doctor does with their patient. It helps us see strength or weakness in the moment. It highlights where momentum is building, where traders feel pressure, and where certain levels carry emotional weight, because we know the market is a compilation of everyone's actions and oftentimes emotional actions. And actually, there's a story that Warren Buffett told that has always stuck with me. In one of his conferences, he actually shared how he spent years studying chart patterns. He loved it, he said. He felt like he was doing the real work, decoding signals other people had missed. And then he read one paragraph in The Intelligent Investor, and his mind flipped like one of those rabbit and duck illustrations. He realized he had been staring at something that looked meaningful, but it wasn't the core of how value grows over time. And I like the story because it shows how easy it is to get pulled into charts without taking a step back. As I always say, when in doubt, we need to zoom out. Because without stepping back to look at the bigger picture, which is once again what I always bring you here at my channel, because technical analysis has its place. It reads behavior and timing. But the larger story always lives outside the candles. Inherently so, because once again, candles and charts and technical analysis only read past and present day patterns, purchasing patterns, market pressure, etc. But now let's talk about fundamentals. My favorite and the kind of analyst and investor that I am. Because when you zoom out from the day-to-day candles, you start seeing the deeper forces that give an asset real staying power. What does that mean? Well, in crypto, that means adoption curves, network activity, monetary design, developer momentum, regulatory clarity, and the way institutions are building around the key assets I bring you here on my channel. And yes, we will be getting into the top blue chip tokens that I believe have the strongest possibility of bouncing back once the market recovers. So hang tight, that's coming. Anyway, if someone brings up Bitcoin's fixed supply, the halving cycle, its role as a settlement network, or the rails that banks and payment companies are building on top of, they're talking about long-term structure, fundamentals. Think of fundamentals like foundation, right? Both start with an F. So when people mention Ethereum's builder ecosystem or Solana's throughput improvements, they're describing the same idea, fundamentals, foundational factors. These are slow structural forces that evolve across years, like the weather. They shape durability and an asset's ability to recover after heavy pullbacks. They're a larger force. That's why I've been saying this bull run has broken away from the 4-year cycle. That doesn't mean another halving won't affect the price. I'm not saying that. I'm just saying the journey and the time span within which Bitcoin will pump and the tops and the all-time highs it will reach will no longer be subject only to within that 4-year time span. Does that make sense? It may be longer, as I believe it is. So this perspective gives you a clearer view of which assets keep compounding through each cycle, which networks actually gain traction over time, and the foundation the rest of the market sits on. This lens sets long-term direction. It gives you context. It builds confidence based on this context and helps you understand what the asset is becoming over time rather than just what the price does in the next few days. That's why I say all the time, we have to become more longer sighted. So with that in mind and this longer horizon mindset, let's move to the force. Let's talk about the force that pushes the market around in real time. And this force is new. And this is one of the main reasons I believe we've broken away from this 4-year confined cycle pattern. Because, drumroll, the ETF flows, the inflows and the outflows. In traditional markets, you have two formal playbooks. Fundamentals, on the one hand, explain value, and technicals explain behavior. Since the ETFs were legalized, crypto has added a third lens: flows. This lens exists because the market reacts to liquidity faster than almost any other asset class, of course. And flows track how much money is entering or leaving the system at any moment. Flows, the amount of them, reveal pressure. They reveal velocity. And in crypto, they often reveal the entire move. And oftentimes, there's a lag between the actual amount of inflows or outflows and the impact it will have in the market, is what I've noticed. So it's another indicator to be watching. And these flows include ETF inflows, outflows, and even stablecoin expansion. These also include exchange balances rising or falling, miner selling, liquidity rotating from Bitcoin to Ethereum or Solana, and narrative-driven waves of capital. Even the way leverage builds then wipes out through liquidations. These forces move on a completely different clock. They shift fast and they can flip the tone of the market in a matter of hours and have a domino effect across the entire crypto market. And flows matter because they determine the strength behind a move. A rising stablecoin supply, for instance, that signals fresh capital waiting to deploy, and heavy ETF inflows can lift Bitcoin even when sentiment feels muted. A cluster of miner selling can cool momentum, and a rotation into meme coins can drain liquidity from majors. So you see the connection between them all. These are pressure events. They're the fuel lines running through the market. So let's think of it this way. Fundamentals are the ground the assets sit on. Technicals are the pattern you see in the candles. And flows are the force pushing the price from one level to the next on the flip of a dime and with the ricocheting effect. So now that we have all three lenses in place on the table, let's talk about why analysts sound like they're living in different worlds. What's the disconnect? Who's right and who's wrong? Which I believe is the wrong question to ask unless someone is saying they're definitely, absolutely the only one that's right and everyone else is wrong. because as I've said in my past videos, I don't think anyone actually fully knows because we just don't have all the information. If you think about it, in order to make a good decision, you need all the information possible, right? Well, if someone is just a technical analyst or just a fundamentalist or a traditional finance person from TradFi, they're operating with only one piece of the pie. They're flying with one wing, and that's not right. I think as influencers and as thought leaders, we have a huge responsibility to back our statements and be careful of what we say because we affect everybody because people don't know the nuances in the market. And that's why I prepared this video for you because I want you to understand what mechanics, what indicators people, other influencers are going off of. So you can listen to them and know, they're talking about technical analysis. Or, who is this person? Oh, they're from traditional finance. Okay, who do they work for? Oh, they work for, Bitmine or, oh, they, whoever. That's why they're speaking from their position. And that's why I cover technical analysis on my channel as well. I cover pretty much the whole suite of everything you need to know. But I'll also tell you that inherently, fundamentally, I'm a fundamentalist, right? I'm not a trader. I don't have a trading channel, right? So you're not going to get that granular detail here on my channel. But as you'll see, in just listening to different trading influencers, they all read the charts very different. And even within their chart reading, they have different theories. And so it's not consistent. And that's why I prepared this video for you because I want you to see the grand scope and the different mechanisms in place that people are using, the different lenses they're using, and different microphones, through which they're speaking to you. So you can decipher for yourself. That's something nobody explains and why everyone ends up feeling confused, right? So essentially, it's like everyone is speaking a different language, like Chinese and German and English and Arabic. They may be saying the same thing, but they're using different languages, so no one understands each other. So here's how to understand each one, all right? Traders who rely on technical analysis, they focus on structure and its past and present tense. They talk about lower highs, failed retest, channels, or RSI momentum shifts. And most of the time, their job is to describe what the market is doing today or in the short term. And as I was saying, okay, this is the part that gets people so confused and tripped up, is that the same chart can mean completely different things depending on who's reading it. And that's why I just say, and I'll say it all the time, technical analysis is just not enough. Listen to it for what it's worth in terms of past and present behavior, but it can't look forward because it's not taking everything into consideration. And there's actually another moment from Warren Buffett that fits this perfectly. He once talked about optical illusions, where your mind flips between a rabbit and a duck, as I was saying. Same image, but different interpretations. Or have you seen those tests that they give different crime victims? Or it's also part of like IQ testing where there's like different random pictures in black and white on different cards and they'll hold them up and ask people what they see, right? Have you seen those in movies or in other places? And it's interesting because it ends up telling you more about that person than about what's on the card because people see through themselves, through their own lenses, experiences, traumas, desires. People see through their own lens. And that's what Warren Buffett is essentially saying, but with this whole duck and rabbit situation. He said that the charts can feel the same way too. Two people will see the same pattern on a chart and their minds will jump into different directions depending on how they're doing or what they want. And once again, not to keep going on and on about it, but this is why technical analysis creates so much debate. It's interpretive. One person sees a breakdown, another one sees a retest, another person sees accumulation. I actually even heard another theory. Let me know what you think in the comments, but somebody was zooming out on the chart yesterday. I forget their name. Never heard of them before, but they were saying that they had a completely contrarian theory on this market. And they were saying that if you zoom all the way out, they believed that we've actually been in a bear market this whole time. And so we're actually looking at us finally going into a bull market. Because if you zoom out, we never really had an actual breakout bull market pump the way we've all seen in past cycles, right? It's just been like up and then consistently sideways. So he was saying given all, and I won't finish it or repeat it because I'm not necessarily endorsing it, but it makes a lot of sense that actually we've just been in a huge bear market this whole time and we're finally about to see the bull run, right? Isn't that crazy? So it just, I can't help but like partially like resonate with what he was saying, but at the same time, I just go back to what I've been saying, which is too much has changed on the macro level for us, and in a positive way, for us to think it's over. The chart is the chart, so you can't go against it. But the truth is, and that's why I made that video, no one really knows, but I just know we're going up. Like when exactly? We don't know, but we're going up. I know that for sure. Like it just come on, like take everything into consideration. There's so much mass adoption on such an astronomical level, like not a little bit, astronomically so, right? So to me, it's a matter of time and being patient and humble enough to recognize we don't know everything and we don't know exactly how it's going to play out, but there's enough information on the table, visible for us to see and hear every single day for us to know that it's going up, like it's going up to $1 million in the near future. Anyway, back to the video, because on the other side of the same coin, right? A coin has two sides. On the other side of this argument are fundamentalists, which I'm more in that camp, and we focus on long range conditions. We'll talk about liquidity trends, regulatory changes in government on monetary policy, adoption across corporations and countries, monetary design, such as the Genius Act and what it enables. I covered that 2 videos ago if you want to go check it out, and institutional integrations, real partnerships, right? What is Chainlink doing? What is Ondo doing, right? What is SUI actually doing in the world? Ethereum, Solana, not from a speculative asset investment standpoint, but infrastructure wise. Like who's it integrating with? That is such a telling sign of where that company and that company's token is going. So you can answer a lot of your own questions on your token holdings if you just go check out their website, go to their partners section or their investors section, go read their partnerships, go find them on medium.com. Go read, join their community on Telegram and ask, like, hey, what partnerships do you have? Anyway, fundamentalist, as myself, we're looking at the path to come in the next 1 to 2 years. And the analysts who focus on flows focus on pressure. They talk about ETF inflows, funding rates, stablecoin expansion. I cover that too on my channel, miner selling, and rotation trends. They're studying where capital is moving, essentially, not reading candles. That's too short time framed for them. And they're not assessing whether an asset has the strength to stay relevant. They're not studying the infrastructure technical partnership of that token, as I do study. And they're not asking themselves whether this asset is going to be relevant in 2 years. Okay, they're studying flows of money. But when you can understand the angle each analyst is coming from, okay, their operating system, everything gets clearer and you don't feel tossed around between different influencers and analysts. The message lands in the right place and you can finally use their insight to your advantage because you know where they're coming from or what they're talking about instead of feeling pulled into more confusion. So now let's bring this all together into a framework you can actually use. Because once you can understand these 3 different lenses or operating systems, here is the part that matters. How to use them when the market turns chaotic. Because it's easy to think clearly when everything's calm. But it's when things are chaotic that you're searching YouTube and you don't know who to listen to, right? So this is the mental model that will keep you centered when every feed on crypto Twitter, social media, the news, and YouTube are shouting a different story. So bookmark this video for the next time you are worried so you can just watch it again and understand, okay? You have to start with the long view. Before anything else, look at the environment. Are the networks growing? Ask yourself that. Are builders active? Is the asset getting more integrated into real infrastructure? You have to ask yourself these simple questions to show yourself whether something, the asset you're debating, has the strength to compound through the next cycle. That's your direction. That's your starting point. Then shift to the money. Check where the capital is flowing right now. Look at ETF activity, stablecoin supply, miner behavior, and how liquidity rotates between Bitcoin, Ethereum, Solana, and the rest of the field. That will show you the pressure behind the move, and it'll give you some context to the swings you see on the chart. After that, look at how the market is behaving. Check the higher time-framed trend, the key support and resistance zones. This is when you shift towards TA. Check the 50-day and 200-day moving averages, the volume, and Bitcoin dominance. These few charts show you where traders are hesitating, where they're accelerating, and where emotion rises to the surface. So it's very simple to sum it up, okay? You have to take your long-term direction, okay, from fundamentals and understand where the pressure is flowing into or out of the crypto market from inflows and outflows, and understand immediate behavior reflected through charts, through technical analysis. So when you run through the market, understanding where it is now, what's going to happen in the near future, you have to run through things in this order. Because when you do this, okay, you go through this process, you'll start seeing what's actually happening and what's what. Instead of reacting to every headline or screenshot, this is how people who last multiple cycles stay grounded, as is my desire for you. They move through volatility with intention because they know exactly what they're looking for and what they're looking at. And if you want me to do a full breakdown on any one of these lenses that I described, step by step, let me know in the comments, and I'd be so happy to build a dedicated episode for each one. But all right, let's wrap it up, okay? Let's connect all the dots. In today's video, we began with that familiar moment of confusion that hits every crypto investor sooner or later. So if you have felt that way, you're not alone. Everyone, I think almost everybody feels this way. Because there are simply too many voices pulling in different directions without explaining the context of why. So remember, technical analysis will call tops and lows based on past and present day data, not the future. Fundamental analysts, however, are pointing or they're looking at long-term strength. Their vision is focused on long-term horizons based on bigger factors in the market, fundamental factors behind different tokens, such as partnerships, infrastructure integrations, their monetary token economic structures. And people who are flow watchers, we'll call them that, they're tracking the pressure coming in from the background, from the big guys, from TradFi, and from the top within crypto, such as stablecoins, because we know stablecoins eventually flow into crypto tokens. So there's a relationship between the amount of stablecoins being minted and what we can project, okay, might happen in the crypto market. There's a relationship. So now you have the map, a framework that will help you decode every opinion you hear, a way to understand what each person online is actually saying and why, and where they're coming from. Most people move through this market reacting to noise, right? But hopefully after today's video and after watching this video again and again if you have to, or bookmarking it, you'll move through this market with clarity because you'll have the map. You're learning the language of the entire cycle now. So if you found today's video valuable, drop a like, subscribe, and share this video with someone who keeps getting whiplash from crypto, Twitter, and YouTube, just hearing too many voices. So stay sharp, stay curious, stay focused. It's definitely not over. We just have to be patient and accept that we don't know all the details of how things are going to play out, okay? But we keep learning, we stay in position, we evaluate our positions, and we're locked and loaded, ready for the next pump. Crypto rewards clarity, and clarity comes from seeing the whole board. And I'll never forget, I'll close with this. I heard a quote, I forget who said it. Was it Nikola Tesla? And he said, "The world dramatically changes when you start emitting your own frequency instead of reacting to it." So I hope today is the beginning of that, now that you have the map and you know how to navigate. I love you guys so much, and I will catch you guys here on Monday. Happy weekend, guys. Love you. See you guys on Monday.